Hi everyone, this is Daniel Goott with Investec Wealth Strategies with the June 2016 market update. In this month's video, we'll talk about some of the economic events that influence markets in May and give you some insight into what they could mean for you as an investor. The Federal Reserve was at the top of Wall Street's mind again in May. Though the central bank voted to hold rates steady in April, the official minutes from the meeting showed that the Fed is closer to raising rates than most experts had predicted. The May report showed that the Fed is moving away from its cautious stance and is open to raising rates as soon as June or July if economic data shows healthy growth. Well, that big if is looking less likely, as this past Friday the jobs report came in much lower than expected and has since pushed the possibility of a rate hike to July at the earliest. The change in the Fed's official stance, however, has surprised many experts who are not expecting a rate hike until the fall or winter of 2016. Remarks by Fed Chair Janet Yellen endorsed the views expressed in the official minutes. Yellen supports a rate hike within the next few months as long as economic growth picks up and the economy continues to produce jobs. Though Yellen thinks the labor market has come a long way, her concern over sagging wage growth and low productivity growth indicate that the Fed economists are watching more than headline unemployment. A revised estimate of first quarter economic growth might give the Fed the ammunition it needs to raise rates this summer. The May estimate of GDP growth shows that the economy grew by 0.8% last quarter, which is up from the last estimate showing 0.5% growth. Though the pace of growth was significantly lower than at the end of 2015, the new data shows that spending on business inventories and home building surged, which boosted growth. The current unofficial estimate of second quarter growth stands at 2.9%, indicating that the economy picked up speed in the spring. So will the uptick in economic growth guarantee a summer rate hike by the Fed? Opinions are mixed. Some experts think the economy looks healthy enough for a rate increase, while others think that global headwinds like a stronger dollar, Britain's vote on leaving the EU, and China will be enough to give the Fed pause. We'll know more about this after the mid-June Federal Open Market Committee meeting, and as always, we'll keep you informed. So that's it for the June update. As always, if you have any questions or concerns about what we've discussed, please give our office a call at 713-622-9111. Once again, this is Daniel Goott with Investec, signing off for the month of June 2016.